Hey, what's happening, guys? Dan Dario here with another Options to Play video update. I, I try to do a video talking about boxing at least once a quarter. Usually it's around earnings season because it's usually the time every couple months where we start to see a lot of big overnight gaps. Right now, earnings are definitely leading to some overnight gaps, but we're also seeing some crazy overnight gaps also because there's just a lot of craziness going on in the market, right? We've seen a lot of really sharp moves, whether that's after the close or pre-market. And if you focus on options like I do, it can be stressful. You're sitting there, you're watching your options maybe move into the money, maybe move really deep into the money, right? And you're just counting down the clock for the market to open at 9:30 because you want to start selling, you want to start locking stuff in, right? So for those that have the ability, boxing is just like a great way to start managing your options in the after hours or the pre-market. And boxing just quickly, it just means using equity to trade against your option positions, right? So if you're long, just say like one call, then shorting 100 shares of a stock would create a synthetic spread, right? So you're long the call, short 100 shares of stock above your strike price, and that creates a synthetic call spread where your call your call is now capped. But if the stock were to reverse, right, and all of a sudden, after hours, the stock is trading above 100, you have 100 strike calls, then maybe overnight it reverses. In the pre-market, it's trading at 98, 99, 97, etc., right? Then, your option went from in the money after hours to out of the money pre-market, and then maybe during the day, it drops even to like the low 90s, so, right? So you saw a nice gain overnight, turned into a loser, and you're kicking yourself because you really couldn't manage it, right? So boxing helps you to like manage those positions when the option market isn't open, all right? So AMAT was one. We had some weeklies last week playing the ASML and Lamb reports, and while those two earnings actually didn't really move Lamb a whole lot, those were earlier in the week. Intel's report on Thursday actually did. So a lot of the semi-equipment names had a huge gap on Friday morning because Intel was talking about the large capex spending. All right. So a name like AMAT, my options expired that day, and you see like a pretty sizable gap in the pre-market where some of my contracts moved into the money. What I like to do is, if possible, like box like a portion, so maybe get back what I put into the trade, like premium wise, right? So I can at least like make sure that if I'm not making a gain, at least I'm getting my money back out of it, right? Or obviously being able to like lock in like a portion where I know that I'll be walking away with like a gain on the trade, even if the rest expire worthless. That's always really nice too, right? Because you want to weigh like the magnitude of the move, the speed of the move, and also the time you have until expiration, right? So because my options were on Friday, they expired that Friday, and the move was happening on Friday. I wanted to be a little bit more aggressive boxing because if it did end up pulling back, then all of a sudden my options go from like a big morning gain to all of a sudden by the close they were out of the money and worthless, right? So if you can, what I like to do is box when I can at least get my net debit commitment out. Or if you can box to make sure you're walking away with like a profit, even if like the other portion of the options expire worthless, that's even better. But just something to think about, right? Because if you have the ability to like trade stock or short stock, and you're seeing your options like swing around wildly, or the stock swing around wildly, and your options are moving into and out of the money with some huge overnight gaps, well, a way to like go about that is to box, right? Start to maybe trade against some of those options, start to try to lock in some of those crazy after hours moves, and then once the market opens, you can trade out of the stock, trade out of the options, right? And then you don't have like the same stress level where you're counting down the clock until 9:30 and the bell rings. All right. Um, so we are knee deep in earnings. Today's gonna be a big day. This whole week is gonna be huge. Just so many top tier names reporting every single day, and I imagine there's going to be a lot more gaps. So keep boxing, keep the idea of boxing in the back of your mind because sometimes a huge gain at 5 p.m. after the market close kind of has a way of evaporating the next day. When we saw it on, like, say, like a Facebook today, right, where Facebook was trading in the 340s after hours yesterday, and now today it's going to close probably around 314, 315. So just because something's up or down a lot after hours doesn't mean it's going to be there when the market opens the next day. All right. So just food for thought. All right, so if you like this video and you're looking for more information about managing trades with options, or this boxing style, which I'm talking about, please follow up with the link in the description of the video for more information on options in play. Have a great night, stay well, and I will talk to you